The COVID-19 pandemic had a significant impact on foreign direct investment, or FDI, in Africa, as flows to the continent declined by 16% in 2020 to $40 billion. In 2019, FDI flow was $47 billion. Now, cascading economic and health challenges due to the pandemic, combined with low prices of energy commodities, weighed heavily on foreign investment to Africa. Interestingly, in a time of global economic challenge, a few African countries saw investments in FDI grow. In fact, Central Africa registered an increase in FDI, with inflows increasing to $9.2 billion from $8.9 billion. Aside from the Central Africa region, Nigeria was notable for receiving more FDI in 2020 than it did in 2019, while the West African region generally experienced a decline. Work is on to take the FDI inflow for Nigeria even higher. The Nigerian Arabian Gulf Chamber of Commerce and the Nigerian Federal Ministry of Industry, Trade and Investment are collaborating to showcase the trade and foreign direct investment opportunities in the country. And this will be happening at Expo 2020 in Dubai. This partnership aims to harness the platform of the Expo to showcase trade, commerce, and investment opportunities between Nigeria, the GCC, and the rest of the world. How did Nigeria see an increase in the midst of a global challenge? Of what importance is FDI to the country's economy? Let's talk about foreign direct investment today on Business Edge. I'm Tolulope, Adeleru-Balogun. Welcome. This is Business Edge. Joining me is Taiwo Adams. Taiwo is the head brokerage services at Commercial Partners Limited in Lagos, Nigeria. Taiwo, good morning and welcome to Business Edge.
Thank you for having me. Good morning.
So just to set the tone of the conversation and a bit of understanding for the audience, we know that FDI is a big deal for many African countries, even for any economy as it is, but more particularly for a lot of African economies as it would be. Why is FDI so important to Africa, to us? Why is it something that we look forward to? And what does it do for our economies?
I mean, FDIs are definitely very important for especially a country, I mean, the African space. You know, most of the countries in Africa are developing countries. FDIs, the ability for the FDIs to be able to create jobs is very enormous. You know, it helps to boost your reserves, which ultimately helps to strengthen your currency as well. And apart from that, I mean, when you have FDIs coming into your country, there are long-term investments that come in, and it means that, you know, several companies from different countries are coming into your country, bringing in foreign currency, which will ultimately mean that there's demand for your currency, right? Which will definitely help to strengthen your currency. And they're not just coming with just their money; they're coming in with their expertise. They're coming in with you know, with a workforce that's ready to train your own workforce as well, which will ultimately drive competition, you know, development into your own country and help, you know, the economy actually grow even better. So I think it's definitely very important for countries, especially developing nations, to drive, you know, FDIs into their country.
Okay, so let's look at the UN CTAD 2021 World Investment Report. So FDI inflows to Nigeria totaled $2.4 billion in 2020, showing a slight increase, about 3.5% from the year before. Now, this is despite a global economic crisis from the COVID-19 pandemic, despite the fact that one of our main resource earners, if not the main, crude oil, took a massive hit because of COVID-19. Some of the main investing countries in Nigeria include the United States, China, the United Kingdom, the Netherlands, and France. So in a year that the world faced an economic challenge, was trying to find a way around restrictions, lockdowns, and things like that, what accounts for Nigeria seeing an increase, however small it might have been?
I mean, yeah, I mean, this is definitely positive for Nigeria. I mean, I think, yeah, like you said, it's a small increase. But I mean, before we even like go into, you know, what accounted for it, we have to also look at the fact that, you know, out of the top, you know, countries that in Africa that received FDIs last year, Nigeria wasn't still the top of, from those countries. If you look at the likes of Egypt, yes, they saw a 53% decline in their FDIs, but they still got about 5.9 billion, right? Mm-hmm. And then you saw the Republic of Congo getting about 4 billion as well. You saw the likes of South Africa getting a decline of 65%, but still got about 3.1 billion. And, Ghana, which is right next to us, saw, an increase of about 139% to about 2.6 billion. And Nigeria, yes, we saw a 3.5 increase to about 2.4 billion, which is okay, but I think we're still, very far from where we need to be. But the part of the things that, accounted for this was, we saw, majority of those FDIs come into the banking sector, which took about the majority of the percentage, which is about 38%. We saw some of those FDIs also go into shares as well. Financing got about 19%. Production got about 9% as well. The telecom industry as well got about 4%, and then the agri sector also got about 3.4%. So those are the kind of things that pretty much accounted for that slight jump that we saw last year.
All right, so interesting. You've taken me to a place I wanted us to go later in the conversation, and that was expanding it to look at how other economies across the continent are faring. As you mentioned, Egypt, even though overall for North Africa, FDI contracted by 25%, Egypt is still the leading country to take the most FDI in the region and also across the continent. Sub-Saharan Africa overall decreased by 12%. You also had Senegal being among one of the few economies that also saw higher inflows for 2020. But let's quickly look at the Republic of Congo. It was the inflows there that actually prevented a decline in the Central Africa region. What's happening there that we should keep our eyes on?
I'm not necessarily, I don't really have that much information there, but I think there's been some sort of, change in their policies and sort of more friendly policies that around, encouraging more investments to come in, and, they're more favorable for, investors to be looking to come into their country as well. So I think those are part of the things that kind of attracted that amount of investment into that space.
But when you look at the numbers overall, Africa is not we're not taking enough of a percentage of the global FDI. As we said earlier, the highest being Egypt for last year was about 5.6 billion. Nigeria, the largest economy on the continent, is there at $2.4 billion. And so when you look at the size of the economy, the potential that these economies have, and actually the percentage that Sub-Saharan Africa, including North Africa, are taking from the global FDI, it's really not that much. So if we say that Egypt is doing something well, what can Nigeria learn from what Egypt is doing? What can we learn from each other and increase the overall percentage that the continent takes when it comes to foreign direct investments?
I think one of the major key factors that needs to be focused on when it comes to FDI would be infrastructure. If you just take Nigeria, for example, I think, infrastructure has been there's been a huge gap in infrastructure development in Nigeria. And I think that needs to be significantly addressed. And, around Africa as well, we have a lot of security challenges as well, and as well as infrastructure challenges. These are the things that needs to be significantly addressed to be able to encourage, foreign investors to come in. Africa, and obviously, particularly Nigeria, it's a very, very viable space, in terms of natural resource and also human capital. We have it all in Africa, and especially in Nigeria, we have it. And there's really no reason why we should be lacking in this space. But apart from all of what I just mentioned, infrastructure gap in Nigeria is pretty huge. And I think once the government is able to try to address that. And, government policies tend to not be consistent in Nigeria, and those things play a major role in foreign investment. Any investor that wants to come into a country always wants to look for a transparent government and sort of consistency in policies, and also security of their investment as well. So when you have a country that's sort of ravaged by security challenges and infrastructure deficiency, this doesn't really bode well for investors that are looking to come in, and also even those that are already here. It also threatens, those already existing investors here. Who might be looking to pull out because of some of these challenges that we're facing. So the government, I feel, needs to provide more information in terms of educating people, investors, onto what incentives are available, in terms of also, trying to also sensitize investors on how they can actually work together to make, to bring about more investment into their countries.
Okay, so before we go for the break, I'm glad we got into this, because one of the things we hear touted from this administration and administrations before that is how much work they're doing in the area of the ease of doing business. So in that particular area, we've seen some slight improvement. So the World Bank ranked Nigeria 131st out of 190 in the 2019 rankings. And this was an increase from 146th place in 2018. Nigeria is expected to do better even by the end of the year 2020 and into 2021. So according to Trading Economics Global Macro Models and analyst expectations, the country should be about 128 out of 190. How does work in the area of ease of doing business for Nigeria, how does that directly impact the flow of FDIs into the country? And you've expanded a bit about infrastructure and security. So let's just widen that conversation a bit. What else needs to be done to ease business for those who want to bring money into the country?
I mean, look at what is happening now in terms of FX liquidity, right? So you have a situation where you've had investors who have come to set up businesses here and are looking to repatriate their funds and have been pretty much stuck in Nigeria for quite some time now, not being able to get the amount of FX that they need to be able to repatriate their funds. So again, I would think, one of the best things that the government needs to do is promote transparency. You need to create a better enabling environment for these investors, for investments to thrive. You need to be able to educate. Again, I can't overemphasize education part of it, because you need to be able to educate your investors. And so that, some investors may not even know what is available to them, or, what sort of opportunities are available, or what sort of incentives are available to them. And I think the government just needs to consistently work hand in hand with the investors, with the potential investors and the existing investors, on finding ways to improve their services or relationship, on how to be able to, further drive the foreign investments into the country. There's so many things that the government can do, but they need to start with, start to tackle this infrastructure deficiency that we have in this country. Once you're able to start doing that and work with the private sector, to sort of help develop this, and I think that would go a long way in increasing the sort of FDIs that we're getting.
Okay, so Taiwo, hold on. I would say hold the line. We're going to continue the conversation and looking at Nigeria's prospects for its FDI. But there are more questions that we need to get into. And I want to emphasize again, for 2020, everyone experienced a drop in FDI. For the world, we went from $1.5 trillion in 2019 to $500 billion. And Africa's share of that money, not so small, but not as much as the country and the continent can be doing, and that's particularly talking about Nigeria. We'll get more into the context of this when we come back. This is Business Edge. Do stay with us. My guest today is Taiwo Adams, the head of brokerage services at Commercial Partners, and we're looking at Nigeria's foreign direct investment prospects. Taiwo, let's go back to the UNCTAD 2021 World Investments Report. And that particular report showed that overall there was a decline in foreign direct investments into the continent because of the COVID-19 pandemic. The report showed that commodity-dependent countries were affected more severely than non-resource-based economies. Many economies on the continent, not just Nigeria alone, are actually commodity-dependent countries. And we see it with Nigeria when international oil prices fluctuate, and it has a direct impact on the country. So my question to you now, Taiwo, is how do economies such as Nigeria address this dependency that also affects their overall health and stability in the long run?
Diversification. I mean, we've been talking about this for quite some time now. There needs to be some sort of diversification. I mean, a huge drive to diversify your economy. An economy that just relies solely on, a few commodities for income would definitely pay the price when things like this happen. I mean, nobody ever anticipated that the COVID-19 pandemic was going to hit our shores, or the global shores actually. And when you are a diverse economy, you are able to sort of mitigate against some of these shocks that may occur when this global crisis occur. And I think that's one of the major things that the government needs to start, driving even more. I know we've talked about growing our agricultural space in Nigeria for quite some time now.
Yes.
But we spent trillions of naira into that space, and it still seems as if we have not been able to yield that much from that space. Although I still feel there's a lot of opportunities in that space. I feel a lot of private sector partnership needs to be done in that space as well. But we might need to start looking in another direction. The entertainment space, I feel, has a lot of potential in Nigeria. We also look at the IT space as well. Technology has been growing significantly in Nigeria as well, and you've seen the likes of Piggyvest, the likes of Kuda, and the fintech space really growing in this space as well. So I think the government needs to sit with the private sector and figure out ways to diversify the economy. We can't just rely on crude oil consistently. It's not working. It hasn't been working for quite some time now. And I think that is something that needs to be at the forefront of the policymakers and, the fiscal authorities pretty much.
Okay. So when we talk about FDI inflows into African economies and countries, we're normally talking about money that's coming in from outside of the continent. And that's a big concern, because even with this decrease we saw, it's because these larger economies from the West, or however we'd like to say, the West or the East, also took a hit. And so they also had to keep a bit more money at home. The African Continental Free Trade Area Agreement kicked off January the 1st this year. And we've also seen that the agreement's Sustainable Investment Protocol should soon be finalized. Do you think that this is something that can have an impact on intra-continental FDI, getting some of the money around the continent to move to other countries in the continent? Because outflow is also there. We're also sending large amounts of currency, hard foreign currency, also out of the continent. Can this help us?
I think it can help us, but before we get into the advantages for this, there are a lot of things that need to be put in place before you actually do this. But I think it's definitely a good initiative if African countries are able to trade within amongst each other, and also be able to create some sort of what should I say, expertise and manpower to be able to also export as well. But when you look at, say, a country like Nigeria, for instance, I mean, we are here, so let's use Nigeria for instance. I think Nigeria hasn't been able to develop its infrastructure enough to be able to benefit from this. I think at the end of the day, we'll end up being the dumping ground, where we are not actually, exporting as much as we are consuming. So we still find ourselves still relatively import dependent, right? And you find that other African countries would just benefit more from this agreement than we would, and Nigeria is supposed to be the giants of Africa. And I feel like, there are a lot of things that we need to address when it comes to infrastructure for us to be able to benefit solely from this. I think it's a very good idea, but there are a lot of things that need to be done, first before we actually get into the operations of actually trading amongst each other as well.
All right, so as we wrap up, I want to wrap up what the UNCTAD has also said. So they said that despite projections for only weak investment recovery in 2021, there are some mitigating factors that signal FDI could be picking up momentum by 2022 and also look to return to pre-pandemic levels. In terms of this projection, do you see this playing out for Nigeria? $2.4 billion coming in out of a global total of $500 billion, more than we did last year, but still not enough in many estimations. Do you think that the projection will work for all of us? Will we see some momentum? Will this trend continue for Nigeria of an upward increase in FDI inflows?
I think it's possible. I mean, everything will still be on the back of how, this COVID-19 pandemic plays out. We've seen that, there's been concerns around the new Delta variant, which is also putting a strain, putting another strain on the global economy as well. And I think, once we start to see some improvement there, we'll start to see, some risk-on sentiments come back into the market, and they'll start to, look at the Sub-Saharan African space as well. But I think for Nigeria, we're now competing with, countries like Egypt and the likes of Ghana, who have, sort of better policy and favorable policies for foreign investors. And those are the kind of things that we need to also try to, work on so as for us to be able to get some of these inflows as well. We're fighting, and, the security challenges that we have in Nigeria is also a big deterrent as well. So these are some of the things that we need to address significantly to help us get some of the share of foreign investment that will be coming in once these investors are ready to start to take on some risk as well. So I think it's something that the government needs to pay attention to significantly, and put it at the forefront of their policies.
All right, Taiwo Adams, thank you so much, the head of brokerage services at Commercial Partners. Thank you for joining me on Business Edge. We'll see you soon.
Thank you very much for having me.
All right. And while the focus has been on Nigeria, it's a larger conversation that the continent needs to have. Commodity-dependent economies like those here in Africa were hardest hit by the pandemic. We went from $1.3 trillion globally in FDI to $500 billion, the highest amount that was received on the continent, about $5.6 billion for Egypt. Africa's largest economy, Nigeria, received $2.4 billion. When you do the math and when you do the figures and when you put it all together, we really need to do better in bringing foreign direct investment here to Nigeria and to the wider continent. These conversations that focus on African business will continue right here on Business Edge. What is up next is NC4 to watch. Stay with us. And for stories that we're keeping our eyes on, we start in the northern parts of the continent, where Libya's Minister of Economy and Trade of the Government of National Unity, Mohammed Al-Hawij, has announced that the national economy of Libya is suffering from great damage and losses. According to reports from the United Nations, the losses were estimated at $1 trillion. Zimbabwe has licensed 57 foreign and local entities to grow medicinal cannabis in the southern African nation. The Zimbabwe Investment and Development Agency said the companies will cultivate and process the cannabis and own 100% of their investment. Kenya has been ranked first in the world when it comes to peer-to-peer cryptocurrency transaction volumes. Now, this comes as crypto adoption jumped by over 880%, with P2P platforms driving usage in emerging markets. The report by Chain Analysis, an organization that provides data and analysis to government agencies, exchanges, and financial institutions, noted that many turn to cryptocurrency to preserve their savings in the face of currency devaluation. Kenyans also use it to send and receive remittances and carry out business transactions. And finally on our list, the hunt for talent in the UK shows little sign of abating, with employers placing almost 200,000 job adverts in the last week of August. A survey by the Recruitment and Employment Confederation found there were almost 1.7 million active vacancies registered online. Top on the list are vacancies for dispensing opticians and driving instructors, while vehicle mechanics were in increasing demand. And that's how we wrap up the show today. Of course, wrapping things up with a few stories we're keeping our eyes on. Continue to watch Business Edge, 11 a.m. West African time right here on News Central as we take you into the biggest business, financial, and economic stories coming out of the continent. I'm Tolulope, Adeleru-Balogun. I'll see you again sometime soon.